Hi guys, apologies for starting a few minutes late today. I made a coffee and I didn't realize the time. So we're about 5 minutes late, but we're here. That's the main thing. We're ready to get today's live session underway, which, to be completely honest, I'm going to wait for a few more people to join because I've just pinged the Darwinex Discord. I don't know what you guys want me to go over today. I've been doing over the past couple of days my Q3 review, which is kind of more from a personal strategy development and building / creation angle. And I know some people have enjoyed kind of watching that process and taking some insights away from that. So I don't know if you want me to continue to do some of that sort of stuff today, because I still have so much to do with the Q3 review, or whether you'd rather me do more Darwinex reviews today. In terms of, if you guys send in your Darwins, I'm more than happy to analyze the Darwins live during this session, but it's completely down to you guys. I would rather do what you want to see. If you want me to take a look at a Darwin, I can do that in between some strategy creation stuff. I'm pretty much just following on from the theme for the guys who were here yesterday and here on Tuesday. I'm pretty much just doing the same thing again. For the people who miss those sessions, I build a multi-strat portfolio of algorithmic systems, and essentially what I've been doing is a Q3 review of all the performance of all of these strategies, mainly to make the portfolio more robust. So less about performance, just, okay, how is the performance compared to what I expect from a back test period, what I expect from the previous months of live trading? Is it aligned, or is something going wrong? And the biggest thing that I've highlighted in the Q3 is that I needed to implement a spread filter, because that's going to save me getting shafted on a load of bad positions. Now, those bad positions might happen once a year, but it might wipe out, a huge amount of gain from a specific strategy, which I saw in my own portfolio. I'll show you exactly what I'm on about now. So if I just drag this across, you'll be able to see my equity curve from the actual Signal account, so the MetaTrader account that I use for Darwinex. My PC has been running really slow today. I don't know whether it's internet-y or whether it's just my PC. I have no idea. Welcome, guys. I can see more people are joining. I'm wondering as well if it's streaming successfully on my personal account. It looks like it is. Fantastic. Yeah, banging. This doesn't look like it wants to load. This is basically a personal trading journal that I built for kind of my own use. I feel like a lot of trading journals out there don't cater too much for algo traders and walk forward testing and stuff. So I started to make my own, but for some reason it's not working. Let's refresh the page. Let's see what happens. The only reason I want to show this is because I want to show you exactly what's triggered me to work on the spread filter over the past week or so. But it doesn't seem like it wants to play ball, which is fantastic. This is exactly what you want. Do you know what? Forget about it. I'll show you on Darwinex. I think it shows on here. So you can see this drop off over here, and then there's another one there. So basically what happened was liquidity got drained from silver as it breached all-time highs. Basically, liquidity providers were struggling to offer the market those prices. This was pre-Trump coming out and talking about China tariffs again. Okay, the day before, and then I got shafted a couple of days after. Basically, from what I've heard, LPs didn't really feel comfortable quoting silver prices at all-time high, therefore spread blew out. And I basically got entered into a couple of trades that kind of wasn't my fault, but also I'm trying to take a bit of ownership on it and say, well, there's things that you can do or there's things you can implement to stop that from happening again. Now, effectively what happened was it tagged a trade on market open. The trade was way above the opening price on Sunday. Tagged the entry, tagged the stop within the same millisecond. If you look on the MetaTrader, it's instant. Not only did I get that, but I was also slipped by like 250%. So these losses should have been tiny, but they're not. So it caused a huge dent in my Signal account. My Darwin is relatively unaffected because of the risk engine, which I'm grateful for. But that triggered the thought inside me is if there's something that I can implement beforehand proactively to eliminate the risk of that happening again, then of course I need to spend some time to try and build that out. It came down to just implementing a simple spread filter. So I've literally been working this week on going through all of my strategies. Currently have 28 strategies on XAQP, which is my account. By the way, if you haven't seen this before, I can see Michael's just said in YouTube, this is his first live stream. So welcome. It's great to have you here, dude. Hello, Gary, as well. Pleasure to have you here, mate. If you've not been to one of these live streams before, you might not have seen XAQP. I use it a lot as a case study because it's my own. I built it from the ground up. And that's what I've been using as kind of a case study this week as we go through the strategy development stuff. I've been rambling. That's a massive roundabout way of saying I'm implementing a spread filter and trying to refine my strategies based on new information, new data, without trying to overfit them, which is the biggest problem. Okay, is looking at new data and going, well, this has changed now. Now we need to change the whole strategy. When in reality, it's not about that. I haven't been looking too much from a performance perspective. How do I improve all of these systems? It's literally from a robustness perspective. Okay, what are some black swan events? What are some things that can go wrong outside of taking a loss? I'm okay with taking a loss on any of my strategies, but if it's a loss that can be avoided, or not necessarily a losing trade, if it's a big loss or a big dent to the curve that could be avoided, I will do everything that I can in my power to do that. FCPZ is my Darwin if you want to check it out. Let's take a look. Darwinex. Oh, I need to be shouting. FCPZ. Audacious. Okay, good start. Right, this looks like a really solid start. The only problem that we're going to have with this, which I'll be honest with, is we only have 3 months worth of data, or less than 3 months worth of data to take a look at. So there's no real insights that you can get from it. I tend to say 6 months as a minimum is where we can really dig into some metrics and kind of start making decisions. Otherwise, you fall victim to, again, overfitting your strategy or your trading moving forward based on such a small sample of data. Even 6 months really is such a small time window to be isolating for kind of strategy development. You want to understand, how does the system work and perform within this market regime compared to this market cycle, when interest rates are negative, positive, up, down, hawkish, bearish, hawkish, dovish, sorry. And many different things like that. Okay, so 3 months, it's going to be a little bit of a problem. So we'll only be able to take a look really at kind of the base level. There's no point digging into, which assets that you trade. Anybody who's been to a strategy development session before knows I spend so much time talking about these different metrics and how we can kind of curate your trading moving forward. But with this amount of trades, it's just very, very difficult to do so. Should have started Darwinex a long time ago, but just discovered you guys. Well, the main thing is that you're here now and you're working towards the future. I actually had a conversation earlier today with somebody who has recently started Darwinex as well. Has made a good amount of money from prop firms, but now they're looking to move their career forward in a different way. Okay, and the conversation that we had was, you will be surprised at how many doors open for you when you have a record of being profitable. Okay, I'm sick and tired of hearing people on Twitter or YouTube say, I don't need a track record because I live stream every day. That's my proof of trading. That is just the biggest BS I've ever heard in my life. I hate that. I hate that phrase. I hate that comment because it's just absolutely undeniably stupid. You could live stream for an hour or 2 hours a day, but guess what? It's another 22 or 23 hours in the day. So you might live stream, follow all your rules, do everything to plan, you might make money. As soon as you come off that live stream, your clients, the traders who are watching you have no idea what you're doing. So that whole idea of, oh, I live stream, that's my track record, it's just BS, and push it to the side. If you don't have a verified link, whether it's Darwinex, FX Blue, my FX book, audited records, I don't even want to hear it. But the point of that is, the point of me ranting there is that I was saying to this trader, you don't even know the doors that are going to open in a year's time, 2 years time, 5 years time. But if you don't start now and you wait for 2 or 5 or 10 years, you've got to start then. Okay. And you keep delaying these conversations and these opportunities just because you're not willing to start a record now. And, you know, taking my Darwinex hat off for a minute, it doesn't have to be on Darwinex. Of course, I would love everybody to build a track record with Darwinex. But if you have something against us for whatever reason it may be, well, great. Go and trade somewhere else on a live account, get a track record. But a prop firm certificates, payouts, these things, they're not going to serve you for a career. They're great for short-term cash flow, but they're not a career. Anyway, rant over before I pee off the wrong person and they start coming for me. I agree, prop firms are cool, but they're not going to attract big capital. Yeah, I mean, listen, I've traded prop firms for 4.5 years, specifically FTMO and a few others. I probably won't ever stop unless, you know, certain rules come in. But I've been trading for a long time. I know that I'm profitable over a long horizon. I know that I can play to prop firm rules and I understand the risks, and therefore I'm happy with taking the risk because the cash flow can be really good. However, that's not the case for a lot of people. A lot of people don't understand the prop firm rules. They don't understand trading over a longer horizon. They're not profitable, and they're just seeing it like a casino. They're putting money in and hoping for money to come out, which, you know, I always tell people, rather than trading, you may as well literally go to a casino and bet it all on red or black. You'll probably have a higher success rate. But anyway, rant over. I actually enjoy prop firms. I like prop firms from a personal perspective. But if you're talking to me and you're saying, I want a career in trading, I want to become a professional, I want to do X, Y, and Z, I always think, listen, you need to park the prop firm stuff for a minute. I actually stopped trading prop firms for about a year. Whilst I focused on getting my head into the professional space. I trade prop firms again now, but because I build a multi-strat portfolio, it's you know, it's no extra stress to me. I just make sure that the portfolio fits the prop firm rules and that's sort of it. But don't waste too much time and energy worrying about this sort of things if it's not going to help the career that you want to have. I know I have a ton of trades, but I scale in and out with very small lots. Okay, let's take a look. Oh, wow. 2,500 trades in 3 months. That's wild, dude. Is that manual as well? There's an average daily trade frequency of 46.5 trades. That's bonkers, that is. I'm presuming this is automated. If not, you must have sore fingers from tapping that button all day. All manual. Wow. $46 trades a day, and you click the button. That means, I mean, fair play to you, dude, because there's such a thing called decision making fatigue, right? You know, you're probably already aware of this, but you essentially have a set amount of decisions every single day that you can make with a clear head, with clear focus, before your decision-making fatigue starts to set in and things come a little bit harder to judge, and you might allow emotions to creep in and you're just not as clear on you know, your next move or your response to a situation. The fact that you make on average 46.5 hard decisions every single day is that's yeah, props to you, man. Props to you. I couldn't do that. I think where's XAQP? Bear in mind, I've got 28 strategies running on this at the minute, and it's been for 6 months. I got 421 trades. So you're heavy on that button, man. But I love to see it. You also got a nice rating this month, which is great. I'd like to revisit this potentially going into the new year. You'll have in January, you'll probably clock 5 months worth of data in, which, you know, it's still not ideal, but at least we'll know how you finish the year and what to plan for moving forward. A lot of what I talk about in these sessions anyway is more to do with, okay, be aware of this moving forward, as opposed to you need to do X, Y, and Z. It might be, you know, you're making a load of money on NASDAQ, but you're giving it all away in gold. Is there something that you should be aware of? Is there something that you're doing as a trader? Does your strategy suit NASDAQ better than gold? Should you implement a risk barometer? There's so many different things that you can do, but this is what these sessions are about. It's like forecasting, being proactive in these changes. But again, at 3 months, it's just very difficult. Even if you're executing multiple times on the same trade, technically you still have one position, right? You might execute 40 trades, but they're all that same one position. It's just difficult to say with any sort of certainty that yes, you need to make a change there, because you just don't know. You just don't know. I could show you some of my strategies, and over a year or over 8 years, 5 years, however long it is, they're profitable. But then if you look at 1, 2, 3 months in isolation, you'd look at it and you go, well, why would I trade that strategy? But so yeah, that's why I'm not a fan of not a fan of the shorter records. But that's why I don't do too much analysis on it, because what I don't want to do is say something and whoever's watching go, I need to look at that or implement that, and you kind of make changes too early. You kind of got to let your edge play out first. You get stopped out a lot and then catch big winners. Yeah. Okay. Interesting. Let's have a look at your capacity. What's the ticker? FCPZ. I presume this would be the case. So you have a massive divergence on your divergence sensitivity chart here. So effectively what we do is we measure the toxicity flow of your orders. Essentially, how easy is it to facilitate your orders as a trader? At the minute, or on Tuesday this week is the last update that you had to this. Your Darwin was at 8.5% return. Now, if your investors or any investor who was in your strategy was getting slipped by 2 pips, in that same time, they'd be down 36% on their account, which is major. So with that in mind, your maximum alpha cap or max investments currently sits about 2.9 million. So if you hit 2.9 million in your Darwin, we would shut off your Darwin for any more investors, because we know for a fact that we wouldn't be able to facilitate any more volume coming through in your trades. As soon as you said you get stopped out a lot, and then you catch a big win, I was expecting this kind of thing. 2.9 million. I mean, if you stick it out for a couple of years, that could become a problem. So I would say it's not an issue yet. And again, we have 3 months worth of data. Maybe this will increase over time. Because it can do, right? As your behavior changes, you might change up some of the things that you do. This could increase, but I would definitely say set a review 6 months from now or 9 months from now, when you're roughly at around a year's worth of data. Take a look at your alpha cap, because it might be something that you want to work on sooner rather than later. I usually tell people not to worry, because if it's 5 mil, 10 mil, 15, I'm like, by the time you get to 10 million AUM, you're probably going to have done some work on increasing your capacity anyway, right? And you'll probably be in arenas or in circles with people who will help facilitate that, because it's a difficult thing to do. However, because yours is fairly low at 2.9, I'd be like, keep that in the back of your head now, because the way you execute is directly going to correlate with how much capital you can manage. You say, wow, so I need to catch even bigger moves and maybe use a little wider stop so I don't have to deal with slippage issues. Exactly that. So you don't have to catch bigger moves, but the size of your stop will directly affect this. And the reason being, basically, if you're doing position sizing based on the size of your stop, which I presume you do to a degree. For example, if you have a 5 point or 5 pip stop, you would risk, let's say, 1 contract or 1 lot. Then if you had a 10 pip stop, you do 0.5 lots, right? So it's the same dollar risk. I'm presuming that's what you do, because that's what most people do. Now, with that logic, if you had, I don't know, a 10 pip stop, for example, and you got slipped 2 pips, okay, you're getting slipped an extra 20%. You're paying up by 20% on your position. Now, if you had a stop loss of 100 pips and you got slipped by 2 pips, you're paying up 2% premium of that position, effectively, because you're paying an additional 2 pip spread. Okay, so you got your 100 pip stop plus 2 pip spread. So even though the pip slippage or the pip spread, is the same, or spread slippage, they're kind of interchangeable for the factor of this. The size of your stop will directly correlate with that, okay, because of the percentage of your stop that the spread and slippage is. So yeah, this is kind of common sense things, which you've already highlighted one of them. There's no right or wrong way to go about this, but you know, things like trading more liquid assets. Okay, so if you're trading the euro dollar, you're more than likely going to have a much higher capacity than somebody trading pound New Zealand dollar, or you know, the FTSE 100 in the UK, or something like that, something that's quite a thin market. You're going to struggle to get as much volume through. You know, getting in and out of trades rapidly. It's not to say that it can't scale, but it's very difficult to scale that. Tight stops. It's very difficult to scale tight stops, because as soon as you start executing with a large clip size, every bit of slippage and every bit of spread that you encounter that's outside of the norm it can really, really damage your P&L. So it's something to be aware of. And the more AUM that gets into a single strategy, the more it can push that slippage. So the slippage can get worse based on the amount of cap that you have. So I usually say with this, it's not a problem till it's a problem. But for you, that problem is far closer, or a lot closer than a lot of other traders that I talk to. So just keep it in the back of your mind. It's nothing to worry about yet. I mean, even if you got 2.9 million, you'd be in a very, very comfortable spot, right? But at that point, you're going to be going, well, how do I get to the next level? How do I level up from here? I traded a lot of euro and gold. I was trading some NASDAQ, but it's not very liquid and I'm not very profitable on NASDAQ. Yeah. So I would say with you, it's probably the fact that you're trading with tiny stops. It's going to be really difficult to replicate with large capital. Not impossible, but like I say, up until 2.9 million, it's okay. After that, you're probably going to find issues. Fulfillment said, "Hey Kieran, how we doing, dude? Do limit orders help for that rather than market orders? I mean, for the capacity factor." Not necessarily, because it all depends on the time of day and the liquidity at the time. So you might find basically market orders get pushed to the top of the queue, right? So if you're using a market order over a limit order, yes, short term, you might get worse conditions because you're basically jumping the queue, right? But then if your limit order gets clipped during the Asian session and you're trying to trade something like pound dollar where, you know, there's less liquidity, then you're probably going to experience the same issues. Yeah, appreciate all the feedback. Thank you so much. It's an absolute pleasure, dude. And it's great to have you here for the first session. Scamfreefx.com said, Kieran the GOAT. Thank you. I appreciate that. Although I'm nowhere near the GOAT. I'm just a dude working hard, trying to make my way. But I appreciate the kind words. Fulfillment said, all good. Thank you. Using them. In fact, let me see. We do have a K-Base article which goes over this. How to manage Darwin capacity. Is it this one? Here we go. What does a capacity attribute do? So if you're ever looking through these attributes, or if you're ever not sure on something, always come to Darwinex K-Base, whether you use the Darwinex 0 or the Darwinex 1. There's so much information on here. And if you read this and like, if English isn't your first language, or if it just sounds like you're reading something that you're like, oh my God, I don't understand any of this. Let's say you're a beginner trader and you don't understand liquidity, slippage, capacity, all those sorts of things. Just copy and paste it into ChatGPT or an LLM and just say, explain this to me like I'm 5. And in fact, we can do that. Let's do it. A fun little test. Let's do it. Explain this to me like I am 5. Let's go. Explain this to me like I'm 5 years old. All right, Kieran, imagine this. You have a little lemonade stand. Sometimes your friends want to help you by giving you more lemons so you can make more lemonade. I apologize to anybody who's joined right now. This is probably going to seem really, really weird, but just bear with me. Your friends want to help you by giving you more lemons so you can make more lemonade and earn everyone more profit. But there's a problem. Your tiny stand can only make so much lemonade at once because it gets messy and spills everywhere. This is what the capacity score thing is measuring. The simple version, how well your Darwin can handle lots of investor money without breaking. So it's a score from 0 to 10. 10 means your lemonade stand can take on tons of lemons and still make perfect lemonade for everyone. Fantastic. Happy days. 0 means that your stand gets overwhelmed really quickly. Too many lemons and it spills everywhere. Why does this matter? So if too many people invest into a Darwin at once, the trades become too big for the real market. This causes divergence, like trying to pour too much lemonade into too few cups, and some people get less than others. The capacity score tells you how much investor money, AUM, the Darwin can safely handle before that starts happening. Do you know what? I might get this added. I might see if the team can add this as an analogy in the actual capacity page on the knowledge base. So I think it's worthwhile, right? I mean, the lemonade stand analogy is funny, but it works, I guess. So we look at the past 12D periods, which are basically the most recent months of trading. More recent periods matter more. The reason being for that is because behavior can change and we have to understand when that's happening. It only starts calculating once the Darwin exists. Hence why we have this. So when did your Darwin go live? 30th of August. So that is... there. So your Darwin went live around here. So he was originally at 12 mil and it's come down to 2 million. So I'm not sure if you picked up the pace with what you was doing. What's the symbol for lemonade futures? Now that's a question that I want to know because I'm going to overload everyone with lemons. The capacity score gets better when trades are longer, held for hours or days, not minutes. TPs and SLs are wider, not tiny scalp trades. The trader uses low leverage, not trading huge positions, and orders are spread out by at least 10 seconds so the market can breathe between trades. Now, what's important to note is this here is not something Darwinex related, okay? It's not something that we're enforcing onto traders. And the reason I say that is because I don't want anybody to watch this and go, so they don't like scalpers. They don't want scalpers on their books. It's not that at all. It's that mathematically, it's more difficult to scale up traders. If I can get my words out, that'd be great. It's mathematically more difficult to scale up scalpers than it is swing traders or position traders or investors for that matter. How are we doing, Tan? Hope you're all good. We already know that because we've taken a look at it. I mean, this doesn't really matter. Poor can handle 140k. I mean, if my capacity was 140k, I would be scrapping whatever strategy that I would be trading, and I would try and find something different because that would just 140k. You would basically, especially if you're trading investor capital, you know, you're probably never going to make a living off of 140k. You need to be, well, unless you're making, you know, 100% per year, but even then, it's just not good enough. Not good enough to scale into a career. I sometimes find between 5 and 10 mil is the sweet spot where you can kind of go, you know, I'll relax. I'll wait until I get to that point, and that's when I'm going to start. Like, I think mine's about 12 million at the minute. It has been increasing as I've added strategies and reduced exposure on older strategies. So my score has been increasing. Here we go. So it's currently 12.7 million, which, yeah, has been increasing since August, which is fantastic. 12.7 million. So by the time I get to 50% of that, so like 5-6 million, I'm going to be sitting down and having conversations with people who I know have worked on this sort of thing before and saying, okay, what are some things that I can put in place so that, you know, in a year's time, 2 years time, when I reach 10, 11, 12 million AUM, what do I do then? How can I expand this? Or do I start building a second multi-strat portfolio? There's all these sorts of internal conversations I would have to have, but it's something that you need to forecast the conversation or the thought process on. The warning, okay, markets don't have infinite liquidity. Contrary to what Twitter traders would believe, when somebody's only experience has been demo money and they've had perfect conditions and then they try and execute in a live market, you know, they tend to throw a hissy fit. And so this is a warning for any of those traders. Markets do not have infinite liquidity and they cannot facilitate stupidly large transactions as easy as a demo account can. If you're used to buying prop firm challenges and slinging 100 lots on gold, well, guess what? You're probably not going to get the same price if you try and execute that in a live market environment. If too much money follows a Darwin too quickly, the prices can move away from the best possible level, of course, which again isn't a Darwinex thing. That is just a simple ladder or broker thing. Everybody's lemonade tastes a bit worse. That's divergence. So investors should watch capacity to know how much a Darwin can scale safely, although it's not really that relevant to an investor because we do cut off the Darwins when they get to that level. And traders should design strategies that can handle more capital if they want to earn more in performance fees. Basically meaning, like I said, if you're happy with a couple of grand a year or a few grand a year and your strategy can handle 140K, well then happy days. If you're somebody who wants to make a career out of trading, you need to be trading 5, 10, even upwards of that million in AUM. So you should always be thinking, okay, how can I scale this? I have one of my other strategies actually. I run the same trades on XAQP onto this account, but I also have a carry trade strategy on here as well, which acts as it's a grid strategy on positive swap assets. So I just get paid for holding the trades basically. Now what you can see, because I have that, the capacity is 82.3 million. Because I mean I've been sat in I've been sat in pound sec for months now. I'll show you if I bring that over. So I've been sat in GBP sec since up here sometime, which was towards the end of August. So we've had end of September and now end of October, which means I've been in this trade for almost 2 months. Like I say, it's a higher risk strategy, which is why I don't have it on XAQP. It's been buying the whole way down, just gridding into that trade. But if we look at the swap fees, where are we? GBP sec. So from here upwards, it's just churning swap fees for me every single night, which is what I have the strategy designed for, right? That's what it's supposed to do. Will it blow up eventually? My tests have said no, but anything can happen in this game, right? And I'm happy with that risk because I don't think it's going to happen. However, because I have that strategy where it's not consistently just in and out of the market. Like I said, I've been sat in that trade for 2 months. The capacity is far, far higher than XAQP at 83 million, which is great. Okay. Where are we? Let's see if there's any other interesting things. Okay. Toxic flow note. Some Darwin send bad quality orders into the market, like trying to sell lemonade that's already gone stale. Oof. These are called toxic Darwins, and even a small amount of investor money can cause problems. So, for example, if you're trading some form of tick scalping or tick arbitrage that works on a demo account, you try and do that on a live account, they might go through as toxic flow, not make any money, and an investor might get absolutely nailed. So yeah, interesting exercise, right? Is explain it to me like I'm 5. If there's ever anything that you don't understand, which has, inside or outside of Darwinex, like it's always a great thing to do because it will literally explain it to you like you're 5. So yeah, interesting. Okay. I'm not sure if anybody wants me to go over their Darwin, please let me know. There's a few more people in the session. If not, I'm happy to carry on doing some of my Q3 review. 2.9 million would be awesome. 20% a year, and that would be 600K, and 15% of that would be 90K. Not amazing, but not horrible. I'll work on trying to push that investable AUM up. Yeah, this is the thing, right? I think when you hit 1 million, you could probably trade full time as long as you know that that AUM is secure and not gonna leave in a few months. You could probably trade full time and make a full time income. You probably wouldn't be the highest earner. You probably wouldn't be the lowest earner, right? As you pass 5 mil, I tend to think 5 mil is where things start to get exciting. 10 mil upwards, you're kind of like, as long as you're performing well, you're just laughing, right? Because the numbers go a little bit silly. Let's see. And 10 mil, if you did 20% for the year, 2 mil, and then kept 15% of that, that's 300 grand on 10 mil, right? But you're doing the same process as if you was on 1 mil, 500K, 100K. Like it's the same process, just scaled up higher. But 300K, that's for a lot of people, that's kind of a life-changing, I don't want to call it salary, but income, right? 300K is, life-changing for a lot of people. Which is why I'm always like, if you know how to trade and you're profitable and you're building your record, consider this, right? Because then if we divided that by, I say 2.9 million, let's just go 2 million. So effectively that would be 0.2 of that. So that'd be 60 grand if you was trading that on 2 million. So it's I guess 60K a year would be life changing in the fact that you'd be trading full time, you'd be fully autonomous, and you'd be living a free life. But from a monetary perspective, you're probably still going to have to budget. You're still going to have to pay all your bills, and understand that you've got bills coming up, and financially, you probably wouldn't be free, for example. Whereas on 10 mil, you're probably looking like, unless you start buying silly things like a Lamborghini every year, you're probably looking like, you're going to be financially free. I hate the word financially free. It sounds so scammy. What I mean by that is you're not bound by overhanging bills. But then I also understand that as you earn more money, your bills naturally scale anyway. So I guess there's no such thing as being financially free. But when people market anything as being financially free, it's usually a scam, because these things take time, effort, responsibility, and upkeep as well, right? Trading is not something that's going to make you financially free, because you'll always be doing something. Gary said, a wild day, look at mine, but 4 weeks in, I will leave it for half a year. Lol. Yeah, let's take a look then. Send me a ticker and we'll take a look. The problem is with being 4 weeks in, again, we're not going to have much data to look at, but I'm happy to kind of give it a quick glance over and see if there's anything that stands out. I'm in some UJ trades, and they're finally going. They finally seem to be ramping up. Bring my MetaTrader over. So I've been testing things all day as part of my Q3 review. Let's get rid of the strategy tester for now. Close all these charts down. Flipping out. I didn't realize how many tests I've run today. There you go. So I'm in one order down here, and then there is two orders. You can't see that there's two, but there is two of 0.07 lots. From there, the 0.07 lots, they will close out at 6 p.m. today. Both of those will. The other one will, I don't think that will close out, the other one. What's the magic number? 4741. Let's take a look. Where are we? That's not the right strategy. What on earth am I doing? I can't remember which strategy it is. I can't even be bothered to find it. I'm just wondering whether it shuts out later today. This is a problem with running so many systems, is you forget which ones are which. We need to break 128 again today. I'm sick of being in the 127s. Even though it's not been that long, it's just October has been pretty slow. QMIC. Let's take a look. QMIC. Yeah, 59 trades in, you say it's 4 weeks in? Yeah, 4 weeks in. I'm presuming that those 59 trades, you're kind of pyramided into a position because the curve is fairly smooth for a strategy like that. Overall, good start, just not enough data to give any sort of real insight into. Let's take a look at what you trade. FX, 100% FX, 84% win rate, nice. New Zealand yen, whole basket of different assets. Value at risk 0.46. Wow, that's one of the lowest, smallest value at risks I've ever seen. So I'm presuming you're being scaled up quite aggressively, right? 4.72. You probably made $100 on your Signal account. You've been scaled up heavily. My value at risk is 2%, and I'm scaled by 3.4. So yours is going to be like scaled by probably 20x, I would imagine. But it's a good way to do it, right? Seeing like tiny numbers in your MetaTrader account and then coming on to Darwinex and having a pleasant surprise. I always like that, apart from when it's a down day. And then I look on MetaTrade and I'm like, ah, it's all right. I've only lost $60 today going to Darwinex and down like 1%. And I'm like, oh my God, I forget that I'm scaled up so much. But yeah. Okay, so let's I'm going to jump back into some of the stuff that I'm working on this week. I was working on an inside day strategy this morning. I can't remember if we started this yesterday in yesterday's session. Effectively, the changes that I've done to this. So if I pull this over here, I'm just going to close all these down as well because I don't need those open. I've got inside day strategy running on both dollar yen and euro dollar. Dollar yen's taken a couple of new trades since I last ran this test, so I need to update these metrics. They are looking better as well, which is great. However, this didn't account for, or this curve didn't account for a spread filter. It didn't account for my slippage filter, and it also didn't account for deleting pending orders at the end of the day. So basically, if there was an inside day, which I think I did explain this yesterday. Also, for any crypto heads, I was trading Cadena back in 2022 when it was like when it ran up to like $30 odd. It's a sad day to see them. They basically closed down the project yesterday, but there's reports that they highly leveraged short. They went short with a high amount of leverage, basically dumped the project. If that's true, that's really, really sad, but it's the name of the game. So inside day. Here we go. So we've got an inside day here. Effectively, what the strategy does is it will set a pending order at both sides of the high and the low. Now, what I wanted to do is add a spread filter in when it sets the orders so that I don't get screwed by any rogue trades. But what I also wanted to do was cancel these orders, right? So, for example, here, there would have still been a pending order set. I think it was it 0.5? It was something like this. It's a negative risk to reward system, something like that. Okay, so that trade would still be in the market now because it never got triggered. Okay, so we'd still have that trade in the books essentially now. Now the problem with that is it hasn't really caused an issue in the past. Okay, like when I ran my original testing and didn't account for this, it never really caused an issue. There was nothing in the P&L that was concerning. However, I know moving forward, I don't want to be leaving orders in the market that have zero relevance. Like we are now, how far on are we from this daily candle? 21 days. Okay, so we're like 3 weeks ahead. Does this daily candle, like, is that an inside bar still? Does it make sense to still have that order in? I think the reason I got away with it was because it is a negative risk to reward system. So it is like you're only grabbing a small amount. So even when price comes down here, if it's a year from now, it will probably move something like that, hit the target and carry on. But I don't want to take that risk. I would rather take less trades for a similar reward, but know that the curve is a little bit more stable. What would also happen too is there an example where I can see it here? Because I think it would be good. Yeah, perfect. Okay, so there's an example right here. So we have an inside bar there. Oh, got an inside bar here. Okay. It would set a buy limit, or sorry, a buy stop and a sell stop on that daily candle. So on the daily high and on the daily low, it would set a buy and a sell stop. The next day also forms an inside bar. Now this is a unique one because it's the actual following day, but this happens. Now what would happen was it would leave the first pending order in, but it would enter a second one. Now, as you can see in this example, it would be great because you would hit target on both sides. So you would have on that third day here, when price breaks out, you would have hit target on both of those long positions. And then when price comes back down in this candle, you would have hit target on both of those short positions as well. I mean, maybe it depends what the lower time frames look like, but I presume so. Yeah, so there was no pullback. And then also here, yeah, it shot straight down, would have hit target. Okay, but the problem is we're doubling up unnecessarily, okay, because the inside day kind of becomes a little bit irrelevant on the second day. Okay, so the second day, another inside day forms. It's a little bit irrelevant, in my opinion. So what I've done is I've set it to cancel the first orders because we're effectively taking the same trade. It doesn't change too much about the strategy because that doesn't happen very often, right? So now I need to rerun that test, or I've already done it. Inside day break. What's this one? Dollar yen. Yeah, so I have rerun that. 393 trades. So it's got rid of. There's an extra 2 months worth of data in the report that I've run today. So the previous report, which is over 8 years, there's 417 trades, as you can see here. But then on the one I've run today, we have 393 trades. So even though we've got an extra 2 months worth of data, we have still cut some trades out, which is great. That's what I wanted. That's why I set the delete pending orders block so that we could get rid of those trades. Now let's take a look at the performance figures. So this did $3,161 across an 8-year period. So for the people who again haven't been to the sessions yesterday and the day before, I run a multi-strat portfolio. All systems, well, 28 of the strategies that are running live currently, I run them all with roughly a 1% max drawdown on each individual strategy, and somewhere between 3 to 10% ideally return over an 8-year period. So they're all super low risk, they're all uncorrelated, and they're all small, simple edges. Okay, it's not like a master system. One system does everything kind of thing. So I'm happy. I was happy with this max drawdown of 1.16 with a return of 3% over an 8-year period, with a win rate of 72.9%. You know, pretty happy with that. However, when I've reran the test today, because we've got a couple of months additional data, we've got a balance of 3,150. Sorry, a profit of 3,150 with a smaller drawdown of 0.97. I'm presuming that smaller drawdown comes from the fact we've deleted the pending orders. Okay, so I'm guessing that the max drawdown would have come from being triggered into 2 pending orders and being heavily loaded onto one side and then getting stopped out. Increase the win rate by 1%, reduce the total trading activity so the exposure is lower, slightly increase the profit factor. I would like to get the profit factor higher than 1.4, 1.5. However, I'm still happy for this strategy to be part of the portfolio. So I'm still happy with that. The curve looks a little bit smoother than the original. So you see we get this big downturn in 2022 here. Whereas when we take away the second orders and add the spread filter in, we don't actually get as harsh of a downturn, which I'm happy with. Like that's perfect for me. So what I need to do now is add it to the portfolio because I don't think I've updated it. No, I haven't. So what we're going to do is we're going to update all of the information on here. So we go, profit factor is 128,387. 128,387. I ignore these sharp ratios anyway. I note them down because it gives me them, but I think there's an issue with the way that MetaTrader scores sharp. It's just, that's way too high for what it is. It's ridiculous. 0.97% drawdown with a 3.15 return. 0.97 with 3.15% return. Okay. Michael said, with such small risk, your Darwin must be scaled up pretty high, right? It's 3.44x. So, where is it? 3.36. 3.36x. It has dropped since the beginning. So at the start, I've added strategies since and scaled the risk back on each individual position. So it has been dropping, but it's stable now around 3.3 to 3.4 and has been since the beginning of August. So I'm happy with that. That's fine. It gives me a nice boost on the Darwin. Whereas when I'm looking at it on MetaTrader, it's not like scary figures. So I haven't got to worry about, I haven't got to worry about any of that. Notion. So we've updated these. Now I need to update these. That's a change I think I made. Yeah. So this was something I spoke about yesterday. Originally, when I ran this strategy and with this report, I blocked out June and July, right? So I'd whether it was overfitted or not, I don't think it was, but I couldn't get June and July to work. Okay, they were just too inconsistent, and the performance just wasn't good enough. I've removed that filter now, so it should still be trading June and July, which it is, because we can see here it's still executed in June and July. But because I've added the spread filter and deleted the second order or any pending orders, it's basically sorted the performance out for June and July, which is fantastic. That's exactly what I wanted. You can see the only two losing months is January and May, but they're not bad enough for me to cancel trading on January and May because I'll have other strategies that should pick up the slack for this when we're there. If the difference was much lower, if the profit was down here, then yeah, I'd be going, it's probably seasonal and remove it for that month, but I don't see an issue with that. It's actually a lot better this way, which makes me think as well, 393, we've cut out a lot of trades from being doubled up and from the spread filter, because not only did we add another 2 months worth of live trading over the past couple of months since I last ran the report, but we've also added June and July in for the past 8 years. So that's another 16 months. So it must have cut out a load of trades over the years, just having those filters in, which is great. So for me now, the strategy is way more robust than originally it was. So what I'm going to do is just update these. I always keep a track of my most recent adjustments, just so that when I go back in and start doing my next adjustments, if I do more in the future, I know what I was doing the last time that I did the strategy or the last time that I ran some tests. So let's just take screenshots of all of these. Graph. I would like to try and squeeze a little bit more out, but for now, I'm not optimizing this system yet. For now, I'm just getting the new filters added. Then I'm going to revisit this and see if I can make it a little bit more juicy. But that's not a concern for now. We'll save this report. So we'll come here, HTML, and then we're going to save it as USD JPY D1. It is D1, isn't it? Yeah, D1 inside day. Of course, it's daily. It's on the inside day. What an idiot. So now that we have this, we've got the strategy report downloaded from MetaTrader. So I'm going to come over to Quant Analyzer and click Load Report. And then I'm going to select the report that we've just saved, import it into QA. Okay, so now we've got the information on here. What I'm going to do is delete the old one. So we've got to find that down here, which is this one, inside day, because I did just add the D1. So we'll delete this report because we don't want to double it up. And now inside day, run some Monte Carlo test on it with 100 sims. Take a screenshot of this. I'll explain what this is in a moment. And then we'll grab the Monte Carlo chart also. Essentially what a Monte Carlo test does is it randomizes the outcomes to give you, 100 different outcomes that could have happened. Okay. The idea here is to find as low a variance as possible. So you don't want a strategy that looks perfect on the test, and then when you run a Monte Carlo with random outcomes, it completely blows up. That's not what we want. So we have the majorities within kind of the average or the mean of these. We have one strategy down here, or one randomness, or one Monte Carlo simulation of the strategy that's kind of underperformed over the time. And we have a couple up here which were kind of above the mean. Other than that, there's not too much to be concerned of here. So we can say within a 95% confidence level, again, over the past 8 years, the lowest profit that we would have made would have been 2.9% with random outcomes. The max drawdown might have increased from 0.8% to 0.129%. That's balance-based drawdown, not equity-based drawdown. So that's slightly higher. I'm okay with that. The return to drawdown ratio would have been decreased from 3.82 to 2.41. So it's not ideal. I probably wouldn't implement this if this was the original test. However, at least I know that even if things got really bad, the strategy is still fairly profitable, and I have time to decide what I'm going to do with it if the strategy begins to not work as well. So now that I've got my Monte Carlo test done, I'm going to create XAQB again. So we're going to go XAQP12 because I'm making adjustments, adding the spread filters in. And every time I do that, I recalibrate the portfolio and get the updated figures. So we're going to come in here, change the initial balance to 100,000 because that's what I run the portfolio on. And see 124.12% return. So it's pretty much made no difference by changing the dollar yen strategy. Although it's made things a little bit more robust, it's actually increased the drawdown, which is interesting. I would presume there's been a time when the dollar yen inside day doubled up on a position and that hedged against some drawdown of another strategy potentially. So the max drawdowns increased from 1.65 to 1.76% over the 8 years, which I'm still ecstatic with because this was 2.5% before I started adding the spread filter in. So I'm super, super happy with that, with an annual return of 10.61% or an annual growth of 10.61%. So I'm still super, super happy with that. I'm just going to ask you guys to bear with me for 2 seconds. I just need to pop for a toilet break because I'm absolutely desperate because I'm in the flow of things and I don't want to call it quits yet. So we're going to carry on streaming for a little bit, but just bear with me for 2 minutes. And we're back. It's quite embarrassing. I have the bladder of like a 3-year-old, but so whenever I'm on stream, I'm always like, oh God, I need a wee, I need to go. Okay, back to this. Okay, so CAGR of 10.61%, yearly average profit of 15.84% with a max drawdown of 1.76. Now, of course, I never run the strategy at this risk level, only on the master account. So I know that my Darwinex right now has the possibility of going to let's just say 3.4, around 6%, although I think it could go higher. I kind of budgeted, if that's the word you should use. 5 seconds, 8 seconds away. I've kind of budgeted for a drawdown of 9 to 10% on my Darwinex account, but the risk multiplier has come down since then. However, I have added some strategies recently, so I do think that it can still hit 9 or 10% over years. But the great thing about this is I don't have many drawdowns. It's more stagnation periods. Now, of course, all of this is hypothetical, right? And again, I used this disclaimer so much yesterday. This is all hypothetical. This is all back tested. Although, this year I have matched the live data to the back test, and things are pretty straightforward from that sense. The issue is the execution conditions, hence why I'm adding in the spread filters, because that's the kind of thing that the back test won't really pick up on. But if we take a look at this, the max stagnation period on the portfolio as it stands right now historically was a period of 93 days, which is phenomenal because, again, before I put the spread filter in, the max stagnation period was like 200 plus days. So tiny little changes like that I'm making not towards performance. I'll be honest, I don't really give a monkeys about performance anymore because I already have that kind of on lock. I proved it in backtest and live. The performance isn't the key focus here. It's more about stability and robustness. How do I avoid black swan events? How do I avoid getting screwed on poor conditions? And how do we maintain this level of performance moving forward? I don't need to increase that output or increase the performance. great if it happens, but that's not the goal. I need to make sure it's as reliable and robust as possible. And I think a lot of traders would benefit from thinking like that as well, instead of being like, how can I make more money? How can I do more here? How can I get more? Instead of being like that, perfect what you have, and really work on fine tuning the stuff that you already have built, whether it's a discretionary strategy or portfolio like mine. Spend some time looking at it and really refining it. I actually don't, Ben. Got any good rollover scalper strategies? Ben said, I don't have any scalp strategies at all, really. And the reason being, I don't know if you was in the call earlier. I don't want my capacity to be limited because I'm in and out too quickly. And then that's a real worry if I start adding scalping strategies in. I'm not good at scalping anyway. I've never done it as a discretionary trader, so I don't in my head have the logic to then apply to automated systems. But also I know that scalping strategies have ridiculously low capacity, so I'm not overly concerned about adding those in. On the flip side to that, though, I'm also now concerned about holding too long, because whilst I've been going through this Q3 review, I found a few of my strategies that have really been battered by swap fees. And it might be like one time in 2021, I got battered on one trade from the swap fees, but it wiped out 50% of the performance for the 8-year period. And it's like, well, we absolutely can't have that happen, because even if it's only happened once in an 8-year period, it could happen in 2 months' time and wipe out 4 or 5 years worth of gains or progress. And that's kind of the thing that we need to proactively think about eliminating before it's happened. Because in my opinion, if you're aware that something has the possibility or the chance of happening and you know how to rectify it beforehand, and you don't, you cannot come moaning when that thing happens, because it's sort of inevitable, right? So anyway, yeah, long answer, long story short, I don't have any scalp strategies. 27.88% since May is awesome. You do only automated trading? I do indeed. So XAQP is my fully automated portfolio. I have 28 strategies on there, all built by myself from the ground up. I for 6.5 years, I was a discretionary trader, focusing mainly on FX, commodities, and indices, and sometimes bond futures. But I made the switch about 8 months ago completely to being fully automated, and I have never looked back. I have many less gray hairs now, much less stress, and just a better life overall. But you got to remember, I have young kids, so I would finish a day sometimes if I'd had a bad day trading. As you can see, I'm in my bedroom. I work from home. I go downstairs and I take the weight of my day downstairs with me, right? And it's an environment for my kids. It's supposed to be a safe place for my kids to, have fun, not feel like pressured. And not that I noticed that was happening, but I noticed that it could happen. And on specific days, I would take my moods downstairs, good and bad, not just bad, but, and I realized it's not the environment for kids to be a part of it. It'd be different if I was traveling to an office and working somewhere else. So by the time that I'd commute back home, my mood was probably long gone and I'd forgotten about any bad trades I'd taken. But unfortunately, I don't have that luxury. I walk down 2 flights of stairs, which takes me 30 seconds. It's a very short space of time to forget about things. I don't even know how I got onto that topic. I just end up rambling. I'm probably the worst person to do a live stream in the world, because I just ramble on and on and on. And then I clap myself and I'm like, am I still talking? Okay, so last change that we need to do on that dollar-yen inside day strategy now is to get that implemented live. So inside day break, new. Okay, so we're going to load up my VPS. So here's all my strategies. Inside day fade, June, July block. That's the one. So we're going to remove that. Here you go. You can see I still haven't deleted that pending order. So this is the order that I was on about on TradingView. Okay, so it's still there from 21 days ago. So what we can do is we can delete that order. What's the price? It's at 146596. So we do remove that. That's gone. And then there's another one, sell stop. So where's that sell stop? That's from. So yesterday was an inside bar. Okay, so I'm going to have to cancel this manually as well because that's not going to come down today. And the logic should be that that goes. Okay, so now we're going to go into here and I'm going to paste the new files. So inside day break new. Let's refresh this. Inside day break new. Drag it onto the chart. Allow algo trading. Yes. Risk. Okay, this is where we need the settings. So we have it on 0.1. TP multiplier is 50. SL is 0.25. Serve time is correct. Spread is 10. Yep. And then magic number is 544. I'm going to save this as USD JPY DY. So we've got those settings done, and now that strategy is active with all of the changes that we made. So the original code was the same, just as the spread filter, the deleting pending orders at the end of the day, and that was all. Oh yeah, the weekday filter is now gone. Or sorry, the month filter has now gone. So it's trading June and July again, which I'm actually really excited about because that was one of the worries that I had was I think I spoke about this in yesterday's session. I was thinking, how do I get rid of? Where's my other trade? Oh, there it is. I was thinking, how do I get rid of the June July block? I'd rather have the same risk metrics as in the same drawdown or the same return, but still trade those 2 months, because I feel like I'm slightly overfitting it to the data. So I'm really happy that I've got that out of the way. What VPS provider do you use, Kieran? I think it's FVXM. Is it FVXM? FXVM. Shut down all of these. FXVM. Yeah. I definitely don't do this, so, and I probably should. Just out of fear that it's going to remove all my strategies and I'm going to have to spend an hour putting them all back on. I might do that this weekend, actually. I might restart the VPS because it does slow down after a period of time, and you get all these MetaTrader download stuff. So it'll be, yeah, I need to do that really. Okay, so that's that done. Pip Smuggler, how we doing, dude? Oh my life, it's good to see your name. 140 viewers, welcome to the big leagues. That's nothing, mate. Yesterday we had I think we had 1,200 yesterday overall across all channels, which is a little bit weird. Like, you know, seeing that many people like tuning in, and I just hope people take value from what I talk about. I know I ramble a lot, but it is what it is. Michael said, huge respect for the automated trading. I appreciate that, dude. I'm purely discretionary, but I've spent thousands of hours trying to create an automated strategies that work. I can never make one that is profitable. Yeah, so I was a discretionary trader for 6.5 years. I loved it, but I just fell out of love with it. It's my simple explanation for it. Like I say, I wanted an easier life in terms of from a stress perspective. And also I'm fairly risk averse as a person. I'm not a massive fan of taking on risk. So every time I press a button, again, going back to what I was talking about at the beginning of this session, was the decision-making fatigue. Like that sort of thing really affects me, just personally, who I am, you know, and I'm kind of getting past all of those issues just by making the transition. And I'm very analytical. I was a data analyst before I was a trader. So doing this sort of thing, like building strategies, testing them, trying to break them, you know, running simulation, Monte Carlo tests. I love doing that sort of stuff, do anything right. This works for me. It might not work for everybody else. And if you're a successful discretionary trader, like that's such a fantastic skill to have. Like, I kind of miss pressing the button, but I also don't miss the feelings that it gave me. So yeah, you just have to. I feel like if if beginner traders spent their first couple of years, instead of chasing a strategy or trying to perfect a strategy, but instead chasing a type of trading that suits them best, they would be so much further ahead than just trying to, find a winning strategy. Like find an approach that works for you, and the strategy will sort itself out over time, as opposed to the other way around. Do you have an affiliate code I can use for FX VM? I gave away the current VPS server I got with Netcup to a guy. I'm not sure actually. Let me double check. I think last time I'm going to do it off another screen because last time I did this, I doxed my personal email address. EHP. So I'm sure somebody asked me about this before. Yeah, fully doxed myself last time. Your referral link. Yeah, I've posted it. I posted it in the. Sorry if you can hear the dog barking. 2 seconds. Let me grab her because she's just shit. She won't shut up if she's seen. There you go. It's definitely like just an innocent person walking past who's just got it in the neck, basically, for breathing in the vicinity of my house. But yeah, as soon as she starts barking, I can't even focus. Okay, so one thing we're going to do now before we wind down for the session is, now that we've made the changes for the inside day or the inside bar strategy, I'm also going to implement it for euro dollar, or at least run a test on euro dollar. I might have to give euro dollar some specific work, but I mean, we'll test it. We'll see how it goes. So this is the original curve. Yes, I was testing this earlier today. It's an absolute nightmare. So I run it on. I might even drop this as a strategy. It's got a really low risk to reward of like 0.3. So it has an extremely high win rate, but it's just not the best system in the world. It's great when it's working, like 2022, for example. Like it was just phenomenal. It didn't lose for like 20 something trades in a row. But over the past couple of years, you can see it's been a little bit more like, still had a great win rate, but because it's had a few more losers, it basically wipes out the whole profit. So I did do some testing on it earlier today. New has the spread filter. If we change this to euro dollar, what I might do is try and find a different pair to replace it with, or a different asset to replace it with that works a little bit better. So the original settings I used were 0.6. This is 50, is that right? Oh, maybe it's higher. 50.2 server times, fine. Spread. Let's say we want a max spread of 8 because it's euro dollar, right? Let's see how this runs. Now, what we're not expecting something too different to this, because I think the only change will be the fact that I've added June and July, so that could make things a little bit rockier. But I don't think it'll be too different. Let's see what else we can do. So we've got pending orders, spread filters. Yeah, we haven't got the month filter. What we could do, if we can't get it to work, because I don't think this system is good enough, could look at implementing some form of trend filter. So we only go long when XYZ has happened, only go short when XYZ happens. Igor said, hello, what are the stream goals? There's no goal really. It's just content. I used to stream you know, presentations for Darwinex, like welcome presentations and all that sort of stuff. But it just got a bit repetitive. We do strategy development sessions, but I'm currently in Q3 review phase of my personal trading, which I do and facilitate on Darwinex. So I thought it'd be interesting for people to kind of showcase that and do it live. Full transparency over here. But it's a pleasure to have you in the session. I'm not sure whether you're watching on Darwinex or whether you're watching on my channel. I presume it's on Darwinex when the questions come through. But yeah, it's more for like entertainment / content as opposed to, you know, being anything else. I think I got a little bit bored, and I'm presuming all the people who come and watch the sessions got a bit bored of the same sort of welcome sessions and that sort of stuff. So it's good to shake it up. What's my channel name? I don't actually know. I just think it's my name. So there we go. That's just at Kieran_Duff. That's my channel. This is false because new videos do not come out every week. I stopped making YouTube videos a while back, just for various different reasons. But I think live streaming, I much more enjoy live streaming than I do making and editing videos. That's kind of a long process. Pip Smuggler says, feels like a proud dad watching this. I appreciate that, dude. It's been 3.5 years since we first met, so things have moved on for us both big time, which is great to see, right? Okay, so we've run this at way too high risk. I'm not sure why it says 0.6 risk, but that defo should be so we divided by 10, 0.06. Let's go 0.1 for now. In fact, 0.09. It's probably more around the sort of risk that we want. Money VD, welcome. So what is the difference between permanent allocation, booster allocation, and normal allocation? Also, this monthly payout upgrade you're talking about on your websites. Okay, so Darwinex has a standard payout on a quarterly cycle. So you'd have to trade for 3 months. You then get paid out at the end of the quarter. We do offer an optional upgrade to have your Darwin ran on a monthly high watermark, so you can take payouts every month instead of every quarter. Completely optional. You don't have to choose. You don't have to choose that as an option, but you're more than welcome to do so. The normal allocations, which I'm presuming that you're talking about DarwinIA allocations, those are given out on a monthly basis by Darwinex ourselves. It's basically a meritocratic way of allocating capital to traders who are performing well. So we take into account your current month's return, your previous 5 months return, and your previous 6 months drawdown. We give you a rating, and then we allocate capital to you based on your rating. If your rating is above 75, you're guaranteed an allocation. At least in silver, it doesn't matter about gold at this point, because if you're in gold, you'd know this question. So a permanent allocation is basically what it says in the tin. It's again completely optional. You can choose to purchase a permanent allocation. It's 100,000 euros, which will stay on your account forever. So there's no limits to it. There's no drawdown limits or anything like that. You just keep trading, and as long as you keep hitting new high watermark highs, then you can continue to take performance fees from that allocation. Booster allocations work very similarly, but they're kind of a hybrid from both. They're kind of a hybrid from both in terms of the fact that it's not meritocratic because you can purchase a booster, again, completely optional, but it's not permanent because it lasts for 3, 6, or 12 months. Igor said, I hope I'm pronouncing your name right, Igor. Okay, I see. First time here. Well, welcome, dude. I appreciate you tuning in and viewing. First time here on a stream and new to Darwinex 0. Didn't start calibration yet, waiting for CPI release, and then we'll see after. Well, if you need anything in the meantime, feel free to reach out to me. Whether you Discord is the best place to get in touch with me, but if you need anything, if you want to jump on a call or you need me to explain anything, please just let me know. I'm more than happy to jump on a call or send you a voice note, or give you an explanation of anything that you need. At the end of the day, it's in our best interest that you guys as traders do the best that you can possibly do, because down the line, we will look to invest capital into as many traders as we possibly can. So I'd rather you all start off the best foot. Okay, yeah, I'm struggling to get this strategy to work as well as it did before after adding in the filters. So I think it's probably time to say goodbye to this strategy, to be honest. At least on euro dollar. Let's change it to, have I got pound dollar somewhere? Where's pound dollar? Am I blind? Am I blind? Am I blind? There we go. Pound dollar. Let's run it on the same settings. Let's increase that. Let's increase that 6.5. Spread filter of 10. Let's see what happens. Sometimes I just like running random tests and seeing if there's something that, you know, it might fit 10 times better. I did also build out earlier with the inside day strategy. I was testing so much on euro dollar trying to get it to work. Where are we? Import project. Inside day fade. Was it the inside day? Oh, no, it wasn't. It was on my RSI mean reversion system. I was building loads, which I might try and incorporate in. So effectively what I was doing was I changed a lot on this strategy, just trying to test things. That's not the right one. Time close plus filters. Time close. Is this one? Nope. Oh my life. Where's it gone? Where's it gone? Nope. Not that one. Like I say, I made so many changes today. New manual execution, new 2 orders, trailed stop 1, 2 orders, trailed stop, 2 orders. Maybe it's this one. Here we go. So what I was trying to do, so I built out this so much, is I've got a month's filter on there, but I haven't got it activated. Same with the weekly filter, obviously rejects Saturday and Sunday, but that's no bother. So once a day at a specific time of hour, it will delete any pending orders that we have. It will then check the current spread. If the spread is okay underneath the limit that I've said, it will look for the RSI. It will then calculate, is the RSI above or below some metrics or a specific value. If it is, it will enter the first trade, which is these trades in the middle. So we've got 2 buys and 2 sells. That is basically just splitting out the same position into 2 trades. One of which will hold till stop or close. The other one will close at the end of the day if it's a losing trade. Then if the RSI is even further extended on the same day, it will put more size on basically. So it will open a third trade. As you can see, there's 3 buys and 3 sells. Those will also run to stop and target. So that started changing the RSI strategy that I have quite dramatically, which was really interesting. Still couldn't get it to perform as well as the original, which is a real shame, because I do think the way that this is set up is quite unique. But I might try a similar sort of setup with my inside bar strategy with this. Oh, wow, it's blown up on pound dollar. Wonder if I just don't think the inside day is. I don't know. Let's test that system, because I think that's more of an interesting curve to take a look at, just for the purpose of this. Mean reversion. Which one is this? Times 2 orders. We want the trailed stop, don't we? Yeah, there we go. So then let's go. What's a pair that mean reverts? Let's go Aussie, New Zealand. Spread on that's going to be whack. Don't really want to do it on there. I'd rather do it on FX. Let's try dollar Swiss. Is that on the daily? Yeah, great. So let's do small risk, and then we'll add even smaller risk. Spread in pips. So let's give it a max of 10. Where's dollar Swiss now? Is that dollar Swiss? Nope. There it is, 7. Okay, so yeah, let's put a limit of 12. Stop loss 0.5, take profit, let's go 350. How many bars do we want to look back to? We want to look back at the current bar. RSI, let's go 70, 30, 75, 25, or 73, and 27. Trailed stop. 60 pips with a 40 pip trail. Let's just test this. Completely random. I don't know how this is going to go. Aussie New Zealand, yeah. Aussie New Zealand's a great mean reverting pair, but the problem that, or the worry that I have with that is just the spread. Like, I feel like I've been burnt with spread, so I'm a little bit it's in my head, but trying to get Aussie New Zealand to work whilst with little spreads is difficult. Thanks for the welcome, Igor said. If I'm not mistaken, there should be 25 trades done during calibration. Does partial closure of an order count as a separate finished order? Yeah, so we look for 25 risk equivalent trading decisions. Essentially what that means is based on your first trade or based on the average of your exposure, we would like to see 25 trades. But that's 25 decisions, so closing and opening of a position. Yeah, so yeah, partial closure would count. If your risk is consistent and you're a scalper or a day trader, you'll probably take 15 days. If you're a swing trader, it could take slightly longer. But yeah, usually on average, you're looking about 3 weeks. I would be nice to have your contacts. I bet I'll have some questions in future. Absolutely no problem. Let me see if I can get a link to. What I'm going to do is I'm going to send you a link to the Darwinex Discord server. In fact, I'll send you my email address. That way it's a little bit easier for you to find. KieranDuff@darwinex.com. Look at Waka Waka. Yeah. I used to use Waka Waka. It was Aussie New Zealand, Aussie CAD, and New Zealand CAD. They're good pairs. The problem is with Waka Waka is it's a martingale, so it just blow up eventually, which it kind of did. Sort of like this is blowing up. So this isn't working as well as I wanted. Let's try Aussie New Zealand. Where are you? There you go. Aussie New Zealand. Let's give it a spread filter of 15. Let's do the same risk on each trade. Stop loss. Yeah. 200. Let's go 10, 30. Let's try this. Again, I usually do it with a bit more kind of method. But just for the purpose of this, I'm just throwing some random stats in and seeing if we get anything interesting. If the curve looks interesting and the data looks good, then I'll start going, okay, maybe there's something to explore here. But if not, it's no problem. But I am worried about this euro dollar strategy, the inside down euro dollar. I just don't feel comfortable enough. Looks like we're going to struggle with the data on Aussie New Zealand. Yeah, it's definitely struggling with the data. Maybe let's try it. Maybe it doesn't have real ticks. So this is annoying because this when you test on every tick, it's not 100% accurate, but it's okay to kind of get the first idea. Spread too tight, yeah, it could be. What's Aussie New Zealand? Yeah, let's try spreading pips. Let's try 100. That's probably even too tight for rollover spread, to be fair. It's still 100 in it, yeah. I think it's the Aussie New Zealand feed, to be honest. I'm sure I've tried testing something before on Aussie New Zealand and I couldn't get it to work. I think. I could be wrong, I'm sure. Yeah. I don't know what it is. I don't know if it just if Darwinex doesn't hold the tick data for us in New Zealand. I'm not sure. Let's try it on a different pair. Let's drop it right down. Shall we do? Let's do something a little bit more liquid. Let's go Euro Yen. Euro Yen, probably going to have to make it a little bit more, 0.75% maybe, with the 300. Let's try this. I don't think I've tried mean reversion systems on a yen pair, to be honest. Yen pairs usually are pretty violent, so I prefer them for breakout strategies. But we'll try it. There's no harm in trying. I have set it right, yeah. No, real ticks. Yeah. I love it when you build a system and you get all the parameters, and I get really excited to press the button, and I'm like, okay, is it going to show promise or is it going to blow up straight away? And then the curve just goes straight down to 0, and you're like, okay, yeah, okay, that didn't work. Which is usually what happens when if I'm trying to test mean reversion strategies on indices or on yen pairs, that usually happens. If I'm trying to run breakout strategies on likes of euro dollar or something like that, again, the same thing kind of happens there. Is there an issue with euro yen as well? I might have to download the data manually for those, because that shouldn't be happening. Let's try dollar yen, because we won't really have to amend any of these. Although the thing is, I'm very heavy dollar yen already. Let's take a look at all the strategies. How many have I got on dollar yen? There, 1, 2, 3, 4, 5, 6, 7. I already got 7 strategies out of 28 are on dollar yen. So I'm very, very heavily kind of reliant on dollar yen. But they're all, or the majority of them, I think, are sort of breakout strategies. So having a mean reversion one on there might not be a bad thing, really. Because like today, for example, we're in 3 longs on dollar yen right now. And I've also had this morning 2 longs on dollar yen close out for profit. Okay, so that's 5 trades in one day long on dollar yen. So and because they're not correlated strategies over a long horizon, but they've all flagged long today. So it'd be good to have something in that was a little bit more of a mean reversion play. So this I mean, it looks promising already. We're only a year in, not even a year in, 6 months in. The risk looks a little bit too high, though, I think, for my liking anyway. So I'll probably have to tune that down. Effectively, what this strategy is doing, because I appreciate I probably haven't explained it very well. I've set it so that it will buy or sell based on is this the one with orders or no? So it'll market execute based on whether the RSI is above or below a certain level over a certain period on the daily, if spread is okay, and then it will enter 3 orders. So it will enter 2 orders if the RSI is oversold. It will close one of those orders if it's a losing position at the end of the day. So if the P&L is negative, it will close one of them and it will hold the other one till stop or target. And then the third position will only be triggered if the RSI is further overbought or oversold. The RSI, people laugh at it, right? But it's if you get the right strategy built around it, it's one of the most reliable indicators that I've found. I also think, simple things like an inside bar, right? I've had strategies working. The dollar yen inside bar strategy has worked phenomenally since I've set it live. But it's like if you said to somebody, oh yeah, I trade an inside bar, or I trade with the RSI. There's this notion these days on YouTube or on X that, it's a very retail thing to do, which makes no sense because we're all retail traders anyway. And it's a bad strategy because it doesn't have this weird ICT acronym, and it's a weird toxic place to be where I don't know. But these things are the things that work consistently over a longer time horizon. Okay, this is absolutely blowed up. That's way too big of a drawdown. 4% already across that. It's basically not took a winning position in a year. Is what I said happens when you try and mean revert on a yen pair, right? I mean, we can pretty much cut that there because I already know I don't want this. Let's take a look. I think maybe this is far too wide. So let's try something that I wouldn't usually do, and that's a tight stop on dollar yen. Let's increase that perhaps. 10 pip spread maximum. 0.85. Keep that at 0.1. Go up a notch, down a notch. Let's increase that 70 to 40. Okay, let's go. This will be the last test we've run because we've been on for almost 2 hours. Can you believe that? It's been almost 2 hours, like flies by, man. And then my kids will be home shortly, and then it will be dinner time. Family dinner time is the one thing that I don't miss on a daily basis. That's like a non-negotiable, right? I advocate everybody here, if you're a parent, do not sacrifice your time with your family for trading ever. There's a quote I heard. Let me see if I can find it because it's a really powerful quote. Professor quote on glass balls. SIZ, what is the name of your personal channel? It is right here. If this is going to load, it's just Kieran_Duff. There's no content on there at the minute. I removed everything, but I'm probably going to start making content again soon. And doing some more live streams on that channel as well. Just because I really enjoy doing this. Like I say, we've been on for almost 2 hours now, and it's just flown by. I love live streaming. Here we go. So it was the CEO of Coca-Cola, Brian Dyson, said, where's the actual quote? I want to see the actual quote. Here we go. In life, there are rubber balls and glass balls that you are always juggling. Your family is glass, so no, that's not the quote. Yeah, they've abbreviated the quote there. So I'll try and explain it from my memory. Is in life you have 5 balls that you're constantly juggling with. 4 of those balls are rubber, meaning that if you drop them, they will one of the balls is rubber. One of the balls is rubber, and that's work. Okay, so if you drop the rubber ball, it will always bounce back. If you lose your job tomorrow, you will always bounce back. You'll find a way. If you go through a stressful period or a bad patch at work, you will always bounce back. The rest, which is your health, your family, your friendships, and then one other, I can't remember what the other one is. These are all glass balls. Okay, and if you drop one of those glass balls, there's no coming back. If your health deteriorates because you don't look after yourself, well, guess what? Sometimes the damage is already done. If you have permanent damage to your family because you're too stressed thinking about trading and you push your family out, well, guess what? That's a glass ball that's going to smash. It's not going to bounce back. You can damage relationships. Same with friendships. And like I said, I can't remember what the 4th ball was, but I think it's a really important concept to kind of understand and really grasp. I remember the first time reading it, I was like, wow, okay, that I need to absorb that, because I was so obsessed with work and career and trading for so many years. And whilst I still am, I always make time to, I know the markets are going to be there tomorrow. I know there's always going to be something that I can do and develop and build. But your family, yeah, you have to make time for them every single day. This just don't look like it wants to be a mean revert in there. Yeah. I don't like these extended drawdown periods. It's not what I like. I do one more test because I'm a bit of an addict to this. Let's try it on an indices, because I had a conversation with one of my friends earlier who said indices are great for mean reversion. I disagree. I think we need to switch this to real tick for every tick for this. I disagree that indices are good for mean reversion, but I'm going to take his word for it, at least for this test. Now let's go 10 pips. What's S&P spread now? 3. Yeah, 10 should be fine. Stop loss. Yeah, let's go 200. No, let's go 150. So we'll keep it short-term trading. Okay, let's test this. I have no idea how this is going to go. No idea whatsoever. And I promise this will be the last test that I run. Disgraceful. Absolutely disgraceful. It's not the last test I'm going to run. Let's try it without all these filters. So we'll go 0.1. This is the battle I had earlier. I spent so much time thinking of these filters, and I couldn't get it to beat the base version of the strategy, which is, you know, simplicity is key, right? I literally said that, you know, this morning. Let's give it slight edge. 125. How many bars? 1, 70, 30 with a spread filter of 10. Let's try this. So this doesn't have all the fancy 3 trades. It doesn't have the trailing stop. This is just base, pure. Ew. That's even worse. At least you get instant feedback. You know you're barking up the wrong tree. Okay. Well, that's fine. I feel like I'm right on the point that the S&P doesn't mean revert, but we'll see. We'll see. See if I can get something working for that. But anyway, guys, I'm going to call it a session there because I'm tired. And like I say, my kids are going to be home very soon. And we've been on for almost 2 hours, which I think is kind of a record for one of these streams. I think I've only ever done like an hour and a half max before. So I just want to say a massive thank you for everybody who's watched this or joined in, or anybody who's put a comment in. If you're watching this on my personal channels, or if you're watching it on Darwinex, I appreciate every single person for tuning in and listening to me drone on for 2 hours about strategies, strategy development, building, yada, yada, yada. I want to reiterate that I know that Darwinex can be quite a complex product to get your head around. So I'm always here to answer any questions that you guys have. The best place to reach me is in the Discord. However, I have put my work email address in, so you can feel free to send me an email too. I'm always happy to jump on calls with anybody, or just, you know, answer some generic questions via messaging, or I'll send you a voice note. It doesn't really bother me, as long as you guys get the support that you need. Because again, like I say, Darwinex can be quite a complex product to understand. So finally, I just want to say thank you all for joining, and I hope you all have a fantastic rest of your morning, afternoon, or evening, wherever you're watching this from in the world. I appreciate every single one of you for turning up and listening to me. So have a fantastic rest of your day, guys. Enjoy the rest of your week and have a great weekend. Peace out. See you in the next one.